Hey traders, it's Danielle. Welcome to this week's episode of Dear Simpler. Today I'm going to be answering a question from one of our traders that was left on my e-letter actually. So last week in my e-letter I wrote about the banks and the bank earnings and how the bank earnings were really critical and the positive earnings and how the positive earnings sent the bank stocks rocketing higher. I said that I am now bullish on banks, and the trader wrote, well, Danielle, I'm confused. Last week you said you were bearish on banks, so did I misunderstand or what's going on here? So, great question, and this is pretty in-depth, so we're going to talk about 3 different factors to answer your question. Number 1, you're correct. That's exactly what I said 2 weeks ago. I have been bearish XLF and the overall banks in general. Why is that? Well, it goes back to the first factor, which is number 1, the technicals. If you look at XLF and any of the bank charts, you're going to see that throughout the majority of 2018, they were in an overall downtrend. As a trend follower, when stocks or ETFs travel up into the retracements, up into the moving averages, you can then short it, short it, short it, short it. And you do this over and over again until something changes. So what is that change? The change is called the switch, okay? And this is a very, very critical part that you have to learn to recognize in your technical analysis when you're a trend follower, or really, honestly, if you're any type of trader, but particularly when you're a trend follower. So what happened last week? Well, the switch happened. So yes, previously I have been bearish the banks, but that's always, you always have that caveat. Yes, I am bearish until the switch happens, or yes, I am bullish until the switch happens. So what happened last week? Well, last week the banks came out, started reporting earnings, and most of them were really good, which comes back to our second point, which is the overall macro viewpoint that has to do with earnings. So number 1, you always want to look at technicals, but number 2, you need to look at your fundamental characteristics as well, the overall macro story, and a lot of that goes into earnings. So we had earnings reports last week. We had Citigroup, Bank of America, JP Morgan, and Goldman Sachs, all with really, really good reports, okay? And because especially the banking sector has been just hammered over the course of the past year, when those reports came out that were so positive, it sent the banks skyrocketing higher. And you know what happened? The switch happened. So what does that mean? That means that I have to now readjust my overall trend follow, okay? Previously it was bearish, 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 then boom, you get a shift, the trend changes, and you now have to readjust how you're thinking. So the catalyst for that happened to be, in this instance, the earnings reports, but really, I mean, it could be anything. For example, last year, before the tariff wars started with China, stocks like Alibaba were some of my favorite to trade to the upside. Alibaba had a pretty nice trend going, same thing with Baidu. But then when the overall macro viewpoint shifted and we had trade wars and issues with China, it brought the whole sector lower and the whole Chinese stock market lower. So at that point, I had to recognize the shift in Alibaba and the switch in Baidu, along with the overall K-Web, which is the Chinese internet stock basket. And because that switch happened last June, I went from trading these stocks to the upside to now trading them to the downside. So this is the same thing that has happened with the financial stocks. So when I say, okay, great guys, now due to these earnings reports, the switch has happened. So we have both a macro and a technical backing. That's great, but what do? Well, last week in particular, you don't want to be the person coming out after the earnings report, after the thing is up 5–10% and buying it then. You do not want to do that. Typically, that momentum, that explosive move after earnings is going to fade. So what are we seeing today? And this is probably even more confusing because it goes back to time frames, okay? Your third point here in this whole episode is time frames. So you have technicals, macro story, and time frames. So when I say, yes, I am bullish the banks, I mean on a longer term time frame, okay? That means that I would like to add some bank stocks to my long-term stock portfolio. I'm particularly looking at JP Morgan and Bank of America because to me, those are the stronger of the bunch. So I am looking to add those, but it's about your time frame because you do not want to come in the day after an earnings report when it's already up 5% and buy it then. No, this is not what we want to do. So due to the price movement in the bank sector that we saw last week, it skyrocketed higher. Well, you have to remember that markets are never going to go straight up or straight down. They're going to ebb and flow. And especially like a runner who just completed a, 50-meter dash at full speed, which is exactly what Goldman Sachs did last week. Boom, it blasts off to the ceiling. It has to take a break. So what did I do today? Today is now Wednesday, the week after bank earnings reports, and today I'm shorting Goldman Sachs with some options. I'm selling call credit spreads and I'm buying puts on it. But that doesn't mean that I think that the overall banking sector is just going to roll over and completely die. It means that I'm making a short-term options trade to capitalize on that giant sprint higher that's going to just, peter back down to the mean. So I hope that all makes sense, but really it just goes back to your time frame and also goes back to the asset class you're trading. When you're looking at your time frame, you have to say, okay, well, on how long are you bullish this stock for or this sector for? In my case, because the switch happened, I am bullish until another switch happens and it goes back to be negative. Where is my line in the sand? Well, typically when you see two closes below the 21 EMA, that's your hint that you're starting to see that shift happen and you're starting to trade lower. But what happened so far is, we had an extended stock that's just pulling back to the mean. So as long as the price bars come back down, lay on top of the mean and hold there, I'm still going to remain long-term bullish. But you can still trade this in short-term options to the short side. So the short Goldman Sachs trade that I have on, I'll probably only be in it for maybe 5 days, at which point, when it evens out and you find the bottom there, that's when I can start adding long bank stocks because you don't want to buy the highs. You want to buy when it's at the mean. And when the price is far away from the mean, it's always going to revert to the mean. So you can short it there. For those of you who are foundation members, right now we're going to move into the chart segment where I'm going to show you some in-depth examples in Thinkorswim along with a couple different trades. For those of you who are seeing us on YouTube right now, if you'd like more in-depth analysis, make sure you join us in Simpler Foundation. You can find that at www.simplerfoundation.com. where I post trade ideas, analysis, and especially the end of week update I like to do called the Simpler Playbook. You can find all of that as a member at Simpler Foundation. Thank you so much, and I'll see you in the next episode.